Good evening, and welcome to AJP's Northeast Asia closing brief. Foreign investors put more than 2 trillion won into Korean stocks in a single session today, and the money did not go where you would expect. 3 markets, 1 catalyst, and a very wide spread in how much of it landed. The KOSPI closed just under 7,100, up more than 4%. The Nikkei 225 finished around 66,400, up about 0.5%. The Shanghai Composite ended near 3,876, essentially flat. The catalyst was the same everywhere: strength in United States semiconductor shares overnight and renewed spending commitments from the American technology giants on artificial intelligence infrastructure. What separated the 3 markets was not sentiment, it was inventory. Korea and Japan own the companies that get paid when that spending happens. China, for the most part, does not. But the more interesting split was inside Korea itself. The rally was not led by memory, it was led by power. Energy equipment, electrical machinery, and cable makers were the day's strongest sectors, several of them limit up. The artificial intelligence trade is quietly moving downstream out of the chip and into the electricity that runs it. The KOSPI closed at around 7,097, up nearly 300 points, or more than 4%. The Kosdaq did better still, up more than 5% to around 790. The flow data is the headline. Foreign investors bought a net 2.1 trillion won. Individual investors sold 2.2 trillion won into that buying. Institutions were roughly flat. After a July in which foreign money left this market relentlessly and the index lost close to a quarter of its value, that reversal in a single session is the most significant number on the board today. Samsung Electronics closed at around 270,000 won, about $184, up nearly 4%. SK Hynix finished at around 1,919,000 won, about $1,308, up nearly 5%. But the sharper detail is Samsung Electro-Mechanics, which closed at around 1,448,000 won, about $987, up nearly 8%, roughly double the move in Samsung Electronics. Foreign buyers have been rotating out of the memory names and into components for weeks now. Today they did it again, in a session where memory itself was already rallying hard. Beneath that, the energy equipment and services sector rose more than 16% as a group. Power cable and grid names ran with it. LG Energy Solution gained more than 8%. The Shanghai Composite closed at around 3,876, up roughly a quarter of 1%, barely a move at all on a day when its neighbors were up 4% and 0.5%. That is not indifference, it is a different trade. Chinese equities are not positioned for the artificial intelligence capital expenditure cycle in the way Korean and Japanese equities are. What China is trading is domestic policy. Second quarter growth came in at 4.3% year-on-year, below Beijing's own target range. And the market is waiting on the Politburo meeting at the end of this month for the policy response. Until that arrives, external catalysts do not travel far here. The composition tells the story better than the index. CNOOC, the state offshore oil producer, closed at around 33 yuan, up nearly 2%, moving on Brent crude above $96 a barrel and continued tension in the Gulf, not on chips. Meanwhile, the 2 Chinese names that are most directly exposed to artificial intelligence infrastructure went nowhere. Zhongji Innolight, the optical transceiver maker, closed at around 1,066 yuan, up 0.5%. Eoptolink closed at around 498 yuan, down 2% falling on the same day. Advantest rose 4% in Tokyo. That divergence is the cleanest evidence available today that the global artificial intelligence bid is not a global bid at all. The Nikkei 225 closed at around 66,423, up 307 points, or about 0.5%. Tokyo took the same overnight news Seoul did and moved a fraction as far. 2 things capped it. The first is profit taking. The Nikkei is up more than a quarter this year and remains the best performing major index in the world, so every rally meets sellers. The second is the yen, trading near 163 to the dollar and sitting close to a 40-year low. A currency that weak flatters exporter earnings, but it also constrains the Bank of Japan, and the market is increasingly pricing the possibility that policy has to respond. Advantest, the chip testing equipment maker, and the purest artificial intelligence proxy on this index, closed at around 30,800 yen, up more than 4%. SoftBank Group closed at around 5,918 yen, up nearly 4%. The name moving against the tape was Fast Retailing, the Uniqlo owner and one of the heaviest weights in the index. It closed at around 77,090 yen, down nearly 2%. A domestic consumer name falling while the index rises tells you this was not a broad advance. It was a narrow one, concentrated in the same handful of technology names that have carried Tokyo all year. Foreign money came back to Korea today in size, and it came back into power infrastructure at least as much as into chips. That is either the beginning of a genuine broadening the artificial intelligence trade, expanding from the semiconductor into the grid that feeds it, or it is one strong session inside a month that has been brutal for this. Market. Nothing that happened today settles which. After a 23% drawdown, a single day of buying proves appetite, not a floor. The test comes if foreign investors are still buying at the end of next week. We will be watching whether that foreign buying holds, and whether the Politburo meeting at the end of this month gives Shanghai the catalyst it has been waiting for. Subscribe for our next briefing. Thank you for watching AJP.